Oh, hello and welcome to this Signal broadcast. This is a extra topical broadcast because I just wanted to speak to a few of our business owners that are in our membership about the impact of the government's recently announced plan for growth, sometimes called the mini budget. And so I've gathered together a few business owners who are operating in the sectors that probably are experiencing the greatest impact. And first up to talk to me is Desi Cole, who is owner of First Choice Finance, which I think is a franchise, isn't it, in the mortgage sector. And Desi's role is to help her customers find the best finance for purchasing houses. So Desi, thank you so much for coming on and joining me and talking to me today. And I know you're very busy in the wake of these government announcements, but could you perhaps describe to us your response to Friday's growth plan announcement?
Well, the key thing for us that made the most immediate impact is the stamp duty benefits. So that's going to be helping a number of my clients who are actually in that process of going through buying their property now. So I've got a first-time buyer who will benefit from it, which is a really good incentive for them straight off. And a couple of other who haven't completed yet on their property, so they will benefit from the stamp duty changes as well.
So they're immediate, not quite the stamp duty changes are immediate today.
Oh, sorry, you cut it out there. I didn't hear what you said.
Yeah. The stamp duty changes, are they immediate, with immediate effect?
Yes, essentially. So they will come into, so they come into play and change, make a difference for those people who will fall into those categories right now. So that's a good thing.
That's a great thing. And what else has happened in your life?
The biggest impact that obviously people might be hearing about specifically in the news recently is the change of the mortgage interest rates. So because the mortgage providers are struggling to get a deal that means that they have a profitable situation, they are struggling to be able to offer clients an interest rate or fixed time frame interest rates and a good understanding of what is going to make their business profitable, because they don't know what rates are going to be available to them in terms of the bank side of things. So a lot of the banks have suddenly put on the brakes because they don't actually know what they can offer their clients, essentially. So they've pulled all of their mortgage products, which started with one major lender, and normally that generally tends to then follow suit. So, one lender has to take the plunge, and once one's done it, then they normally then all kind of follow quite quickly in succession, which is essentially what happened. So very quickly, the markets just kind of all pretty much closed their doors, which was very similar to what happened when COVID first came along as well. People were, the banks were uncertain as to what the situation was going to look like. So they just put a massive pause on things. And that's what's happened again. So because of that, the news has kind of tapped into that, because it is quite a groundbreaking or something that's unusual to happen in the mortgage market. And they've made quite a big deal out of it as well. So it's, put a massive pause on what is available to my clients. So a lot of concern, as you can imagine.
So on the one hand, you've got the removal of stamp duty under 250,000, which is presumably making everybody rush to the mortgage advisors. And on the other hand, the mortgage lenders have withdrawn a lot of their products. So that's a bit of a perfect storm for you today. So I wanted to ask you, what are the kinds of questions that you are getting from your customers?
So I think the key ones that they're concerned about is what the impact is going to have for them when it comes for their mortgage renewal. So a lot of people who are already in the market themselves, or who already have a mortgage, are trying to understand what the impact is going to be for them when they then come to renew that mortgage. Funnily enough, for first-time buyers, because it's, they just kind of going along and they're sort of like, okay, well, whatever the situation is, we will take it on board. They're kind of dealing with it a little bit better than the people who are already in the situation, thinking, how am I going to potentially deal with a massive increase on my mortgage payments, which is understandable, really. So it's just understanding what that's going to mean. And the difficulty is there's no massive predictions, because it's never been seen before that this type of thing has happened so quickly. So it's kind of just working out what the next steps will be, again, similar to COVID. Just take each little step at a time. But it's not all bad news. It just means that they're just taking a look at it again. So they're just taking a big deep breath and going, okay, what do we now want to actually put out to our clients for the future? So they're all just taking their break, and then it'll slowly come back on into the market again. And we're already seeing some lenders kind of go, this is the new products that we're now offering our clients. So it was because it was that pause, and that was such a big, the news made such a big deal out of that pause, whereas it does generally tend to happen in the markets generally when they change their interest rates anyway. It just doesn't happen on such a big scale. So so that's what's caused the news, I suppose, to make a big deal out of
it. Like always. So are you fairly confident that things will settle down over the next, I don't know, weeks and months in your market? Do you think
the thing about the mortgage market, which is very interesting, or the property market in general, is that it doesn't ever stop. It's a constantly rolling. There's always people who are looking to move. There's always people who are looking to buy. It's just it does have that rolling. Opportunity, as it doesn't necessarily become the best for someone who's looking to sell, but if you're looking to buy, you might find yourself coming across a good deal. So it kind of constantly moves. It might move slower, and sometimes it moves faster, but it does always move. And I think with everything in terms of finances and growth and inflation and costs, everything always sort of expands, and somehow we always manage to do that whole thing that the English love so much, the whole keep calm and carry on. We always seem to manage to carry on through it, and then get to the next stage, and then we move again from there. So it's just that settling down period, and then it does sort of tend to then pick back up again as people find where their avenues or routes are.
So I think, so from your perspective as a business owner, you're feeling like, well, we've seen this kind of disruption in the market before, and we've come through it before. So let's just get on with our work. That's a great attitude.
I think that's where I'm hoping to be. And I think the same, we all are self-employed. From a self-employed perspective, the new budget does help directors of limited companies, because their tax impact has been changed, where we thought that would make a difference. So I suppose we've got to take the goods and try and take advantage of those, whereas before, generally the self-employed person who was looking for a mortgage was at a slight disadvantage. Now there are some elements that could help with that, and equity release is still something that is available for the other end of the market as well, which is something that's always helpful for those clients who are in that situation. So there's always positives to draw from it. It's just it's just trying to find that sometimes.
Thank you for ending on two positive notes, and especially the fact that as business owners, self-employed, people who pay ourselves in dividends, we're going to be slightly better off than perhaps we had anticipated in some ways. Obviously, like you say, there are other things that will balance that, like rising energy costs, inflation, and so on. But we'll all find a way through it. And it's good to see you positive, good to see you busy, and thank you very, very much for your insight into the life of a mortgage advisor post government growth plan. So thank you very much, Desi Cole. Thank you for joining us.
Thank you, and thanks for the opportunity to speak.